Let's dive right into mind-blowing macro charts, which paint a very clear picture of where we are. The last two videos have actually been pretty accurate in terms of what has actually happened. We've called for this bear market rally. I've called it a sucker's rally, and here we are. Now the question is, will it last a few weeks? Is it really a sucker's rally? Is the market pricing correctly? The Federal Reserve is going to have to ease now, right? If the Federal Reserve can ease in this environment, then risk assets can pump. That's what the market is thinking, that inflation has peaked. So we will dive right into what exactly is going on. We're going to start with charts showing just exactly how dire the situation we are in is. It is truly a nightmarish time if you just take a look. So here we have real disposable income historically, not only at an all-time low, at an extreme low. America has never been quite in as much of a disastrous situation as this. People do not have cash. Here's another way of looking at it. The personal savings rate, absolutely at the floor. People can't hold on to their money, probably because inflation is so high, so they're spending it. So that is the setup. Citizens of the world are feeling it financially, and there isn't enough cash to serve as a cushion to weather any sort of crisis. Now look at real estate. Most of people's wealth is in real estate. Residential real estate prices in blue tracks almost perfectly mortgage lending rates percents. Well, that's a reverse mortgage lending rate. So when that's going down, the mortgage rate is going up in orange, right? So look at what is about to happen to residential real estate prices. They are absolutely about to crater to the floor because mortgage rates have not spiked like this pretty much in the entire history of the United States. This is an epic move. And so again, more not great news on the horizon for the United States. Just looking at these charts, this is the setup. Then you have Powell's preferred yield curve indicator. This comes from Macroeconomic, the macro compass. So Powell's preferred yield curve indicator is now inverted. This is what the Federal Reserve looks at. So pretty much what it's saying is that the 18-month yield is lower than the 3-month yield. So bond yields inverting are a signal of recession. So everything I'm showing you is pointing to a massive, deep, rotting economy / recession, if not depression. That's what all this is showing. So we'll figure out where we're going to go next. Global growth optimism at an all-time low. I mean, go back to the financial crisis, global growth optimism has not been this low. So not a great setup by any metric. Net issuance of U.S. high-yield bonds. People aren't even issuing debt. There's a lot of zombie companies out there that were relying on that IPO, that were relying on that sale. What a lot of companies are doing right now is they're getting venture capital. They're putting all that money into Facebook or YouTube ads. They're growing the revenue of their business at really fast rates because of the ad spending. Whether or not they're profitable hasn't mattered. So they just keep getting that cheap, easy funding, and then they do an IPO just based purely on the revenue growth. That is all going away. No one is issuing capital to zombie companies in this environment. That's what this chart is showing. It is very, again, scary. And what's even crazier is look at this. This is FANG revenue, real growth. This comes from Tavi Costa. So you have Facebook, Apple, Amazon, Netflix, Google. Look at that. The strongest companies in the world are having negative revenue, real growth for the first time. And so why is all that happening, right? Well, look at the Fed target rate in white. The reason that is all happening, all that bad stuff, is because that white line in the bottom right corner has been going up. That is the Federal Reserve's target rate. When that happens, the US economy falls apart. This is called a centrally planned economy. Look at all the other times it went up and what happened to the stock market, right? The question that is the most important to ask right now is, when will that white line come down, right? Because that white line is absolutely cratering everything, like I just showed you. So when do you guys think that white line is going to come down? Well, there's a lot of important questions to ask in order to answer that. And so the brief rally we've gotten, first video I predicted that short squeeze, we got it. Next video I predicted a big sucker rally, we got it. It could last a few weeks because the market is starting to think that the Federal Reserve is going to not tighten as aggressively. This white line is not going to go up as aggressively. And so what that means is that the US economy can finally breathe. The only problem is that the Federal Reserve is tightening into a deep recession. And that breaks the economy. That shatters the economy. To expect no more further downside because the Federal Reserve is going to ease up a little bit is not the case. We need this white line to crash down to the earth to have any chance of saving this economy. Now, what is needed for that to happen? Well, inflation needs to crash. Okay, inflation absolutely needs to crash in order for that to happen. Now, here's another setup, absolutely historic. Percent of global countries with headline CPI at or above 6%. Look at this massive move. This is global countries, headline CPI, inflation, government inflation above 6%. That is a lot of inflation. Historic move. Look at the 70s. Everyone says the 70s were so bad. This is way worse than the 70s. This is absolutely historic. This is why the Federal Reserve has been absolutely intentionally crashing the US economy, because of lines like this. It is so important for them to get inflation down. Now, what is all important is, can they get inflation down? Has inflation peaked? The market thinks it has. This line seems sticky to me. This line is indicating that it's a deeper problem than most people realize. So if inflation is stickier than people realize, then the Federal Reserve can't bring that white line down. They can't bring their federal funds target rate down. And so that is the problem here. It's like, you have to ask the question, is inflation going to persist longer than people realize? The good news is that we're not going to get a government inflation PPI CPI rating for a few weeks, which is why this sucker rally can absolutely last a few weeks. I'm calling it a sucker rally because we don't know exactly what is going on, but what we do need is a crash to incentivize the Fed to step in and lower their target rate. Now, if inflation is bad, then that crash is going to get even worse because they can't lower the target rate. And so look at this last chart. We're showing, this comes from Raoul Pal, crude oil year-over-year percent in white, GM. This is Global Macro Insider Financial Conditions Index. So when that blue line goes down, financial conditions are bad. Obviously, we're back in the 2008 global financial crisis level. Markets have not even started to accurately reflect this yet. But the argument here is that because of this depression caused by the Fed, crude oil, inflationary inputs to the economy, commodities are going to have to crash. So that white crude oil line is going to have to crash. If that can happen, then the Federal Reserve will have successfully killed inflation, and they can finally start to ease again and essentially plan us out of this mess. Now, the problem is it different this time? Are oil shortages because of global supply chains, because of Russia? Are these real? If that oil doesn't come down, then we're in for a massive world of hurt. But no matter what, we need that Fed funds rate to come down. And so the only thing that's going to cause that thing to come down is a massive financial collapse. They're not just going to bring it down when inflation is as high as it is. So there's going to have to be a massive financial collapse, which is going to have to kill inflation in order for that to happen. That is probably what the Fed is expecting. Now, what's crazy is sometimes bad news is good news. That's what the market realizes. The market knows how bad things are, at least you'd think most of them do, but they're pricing in a big rally in growth assets right now because they think that the Federal Reserve can ease. So the real question I would pose to you guys is, has inflation truly peaked? That is the most important question. And to answer that question, is the natural gas oil supply chain issue resolved, right? is a lot of the COVID disruptions. Is that all resolved? So yes, an economic depression would kill inflation and kill demand, but have the sticky inflationary signals and inputs been resolved? Because if they haven't, then that white line is going exponentially higher. The market is going to get crushed exponentially more. Now, obviously, that's going to be an incredible buying opportunity long term if you're an investor in high quality assets. But just giving you guys a picture into what is actually going on in this crazy economy. And to my personal prediction, for what it's worth, obviously, I'm not trying to time the market. Obviously, having a small short hedge position on top of your assets is always a great idea, especially in historic times like this, when historic volatility usually follows. My personal prediction is we get a nice rally for the next few weeks while the Fed is on vacation, while we're waiting for that inflation reading. If the rally is strong, I would imagine there being some sort of inflation scare, which causes that rally to end drastically, right? Markets melt down even further. We go through a stagflationary crisis. The Federal Reserve has to raise interest rates to ridiculous levels, just like the 70s, in order to clamp down. It's a financial disaster, but I do believe that long term we get out of it, and that long-term, high-quality hard assets and other assets are going to be incredible buying opportunities. That is my personal opinion, not financial advice. But we will continue to stay on top of this market. There is so much going on, so much to cover. Thank you guys for watching. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. Do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.